So looking at gold from the weekly time frame, so gold has been very volatile post-election. So we just want to have a breakdown of it. So of course, this is our all-time highs on the weekly. And this weekly candle has not yet closed. So we cannot conclusively say this is a bearish closure. So it could pull back or it could pull further down. But then now this then makes our lows on the weekly time frame. And of course, this has the break structure. So then from here, we are assuming that if price is able to push down all the way up to these lows, there would be a reaction. And that reaction will determine whether it could push back up or it will just be a minor one and then break. So for that case, we need to look at the lows on the left side. So if you look here, you will see this low here, which has also been broken. The market has broken below this. So, and on the daily time frame, you can clearly tell here that price has actually closed below this other high here. So this is another potential resistance area that we shall want to see price from. But it is important to see how this is a high, and then we had a low which was formed, and then another low. So the other area in which we would also like to trade is if price is able to pull back all the way up to these areas here. So these are our potential resistance areas. So once we have that established, so this is our potential support, and then we have our resistance areas. We can now come to a lower time frame, say the 4-hourly. So on the 4-hourly, this is how it will look like. So you can clearly tell here we have the strong candle break that also broke below these areas here. So we can also mark this as a price difference and also another potential resistance areas. But now the point is to work with the nearest one. So the nearest possible resistance area is this area here, this one here. So that is the first thing we shall have to work with now. So what we will need to do now is to find trading opportunities around these areas here, around these areas here, and then these are the areas. So you don't want to jump into trades here because price is kind of hanging. So you want to wait for price to pull into this, and then you can trade. So we'll work with the nearest one. So when we come to our lower time frame, let's say on the 15 minutes. So on the 15 minutes, we are seeing here price is forming like lows. So we had this low and then another low. Then from here, we are seeing that possible scenario where price could actually pull into this area here. So how do you want to trade gold now? You want to wait until price either pulls into this area. The moment it pulls into this area, you begin to look for patterns here. Either double top, head and shoulders, your order block patterns. The moment you see the patterns here, then we can actually have a trading opportunity. And if we don't see the pattern, that means price could actually continue to go up into these other areas. And then we also come, if it don't see the patterns here, we will look for them here. So that's what you just need to do, is to look for patterns at around key areas of interest. And the moment you do that, of course, you'll be working with this as your low. Okay, because what price could do, it could actually just come and break this low and continue into this level you have here. So you want to be able to trade when price gives you the permission, but these are the key areas in which you want to trade from. So let's see how this is going to play out, especially during New York, and then we see whether we can have a trading opportunity. So that is it on gold. We just need to sit on our hands and then watch for the good trading opportunity.